Welcome to AgriFood Conversations, brought to you by iSelect, the Van Trump Report, the Yield Lab Institute, and Family Farms Group. I'm Hannah Hund, an analyst on the iSelect Fund Ventures team, and I'm excited to welcome you all to our discussion today. AgriFood Conversations is all about driving innovation in agriculture. Each month, we highlight a specific theme, including emerging topics such as soil health, plant genetics, vertical farming, and aquaculture, to name a few. This month's theme is innovative business models, and on today's call, we're joined by Dan Cosgrove, CEO of Growers Edge. Growers Edge is a data-driven platform for agriculture that uses financial technologies to mitigate the risk to farmers of adopting new growing practices. Growers Edge delivers financial products and solutions to innovators that enable growers to adopt new agriculture technologies and agronomy practices that drive yield improvements and income assurance. Each of you knows companies are more likely to succeed with the right network of customers, talent, investors, and advisors. We've invited you to this call because you're some of the smartest, most talented people in Growers Edge market. You are potential customers for Growers Edge products and services. You have built a company similar to Growers Edge, or you are a sophisticated business person or agricultural professional who understands the market and the challenges and opportunities Growers Edge may face. Before we get started, we have a quick poll question to get a better idea of who we have on the call today. Please take a few seconds to answer. While we have that poll running, a few process comments. We are not soliciting investment. This presentation is to provide information to help Growers Edge find customers, mentors, and other strategic relationships that can help them grow their business. You are all on mute. You can use the chat window or Q&A box to ask a question at any time. This presentation is being recorded and will be available for replay. So without further delay, I'm pleased to introduce Dan Cosgrove, CEO of Growers Edge.
Thank you, Hannah. I know I've got a couple slides here to go through that you gave me, but the first one is the disclaimer. I think you mentioned that already. I'm glad I don't have to read that, but is there anything further you'd like to mention about the disclaimer slide too?
No, that's fine. You can move on to your slides.
Great. Well, thanks again for having me. Really pleased to be able to address your audience today. I'd like to talk a little bit about Growers Edge and our primary product, a little bit about our market, and then hopefully answer some questions that you all might have regarding our product, which is a warranty-backed recommendations that can be followed by growers. I don't think it will be a shock at all to anyone in your audience, Hannah, regarding the economics today in farming. For a lot of reasons, macroeconomic or otherwise, there are tremendous pressures on farmers today, resulting in decreased profitability per acre, decreased income for the farmer, and unfortunately, a rising number of bankruptcies in agriculture. Again, in quite a bit more detail, there's a lot of factors that are playing into this, including the kind of an end of a commodity super cycle, impacting farms' bottom lines, like we mentioned, and all that despite a whole lot of effort by some really smart people to bring new technologies to bear for farmers and growers. Because of that, however, what we're seeing, even though there's a lot of these new technologies that have the potential to improve or increase profitability per acre, farmers are spending or trying to spend less on their inputs. And that makes sense. Much like if my profitability or my income was starting to lag, I would try to decrease my spend as well. Unfortunately, in agriculture, what that does is it tends to have farmers make decisions that decrease their ability to rely on these great new technologies and tools. And as a result, they are a little more likely to see decreased yields the following year. And of course, if you have lower yields, you're likely to have even less money to spend subsequently. So what we've tried to do is come up with a product that allows us to turn that cycle around and incent farmers and growers to try some of these new tools and technologies that are available. We really do believe that some of the common financial tools that are available to growers today are just a little bit behind the times. In fact, we see a lot of effort for new fintech type approaches in a lot of other areas, including student loans, mortgages, credit cards. But for whatever reason, those types of disciplines have passed over agriculture. You only have to look at the three that I've got on this slide, Hannah, to know that maybe we're lagging a little bit in our ability to follow some of these new, maybe novel business practices. First, on insurance, again, it's very traditional in its approach, a little clunky. It does rely very heavily on the rules and regulations that surround the federal multi-crop programs. And it's been quite some time before any innovation has been brought to bear in that space. Likewise, traditional lending suffers a lot from two things. One, there's a tremendous demographic switch where more and more acres are being rented as opposed to owned, which makes it very difficult to get asset-based loans. And also, again, this is another area where a lot of the new fund tools that are being brought to bear in places like student loans and new Visa cards and all these great tools in other areas are just not being addressed or brought to agriculture. And so finally, what we've done is we've created a data platform that brings in data from a number of sources and in the end outputs two specific items. So let me just kind of walk through this chart left to right. First, on the left, we bring in data sources from really three primary buckets. Some proprietary data that we have that we've acquired over the past couple of years. We also partner with ag businesses and ag input manufacturers for their data. And then we pull in a number of data sources from publicly available items like satellite information, weather information, et cetera. We take that data, ingest it into our data models, and then applying common tools of machine learning, artificial intelligence, we're able to draw certain inferences from the data. Again, this is something that's being applied in a lot of industries, and what we're trying to do is bring these skill sets to agriculture. In the end, we have two outputs. One I'm going to talk about in a little bit that we call our APP, or our agronomic performance product that carries with it a warranty. And then second, one I'm not going to talk about, but one that we're hopeful to launch later this year is a new input loan platform. First, I want to talk about our APP. The APP, or the Agronomic Performance Product, is a tool that we work to develop with our primary customer, which is ag retail. We work with ag retail and ag input manufacturers primarily with their sales teams and with their science teams to design a product or a series of recommendations that can be followed by any grower or any farmer. They typically include things like planting their brand of seed from a list of hybrids that we select, perhaps applying certain chemistry, fungicides, if the need arises. And when we come up with that product, we're able to then design and decide on two outputs for that product. We're able to back our product with a warranty that creates an APH, or a production history level, that will not be drop. You won't drop below that line. And then we create also a payment if it does. And this system, what it does is it allows us to make recommendations to growers. And if they follow those recommendations and they fall below that yield threshold, whatever the ag retailer decides, we send that grower a check in an amount per acre. If they exceed that yield threshold, well, the farmer gets to keep all the upside. And I think that's an important distinction between us and maybe some of the other folks that are trying to do similar things out there in the marketplace. Flipping a slide here to kind of graphically display how this works. Again, what we do is we work very closely with ag retail. we design this product, and then that ag retailer can then offer it for sale to the farmer or the grower. They can do that either like a standalone product, almost like an extended warranty that the grower or user might get from Best Buy, for example, if you went and bought a new TV this weekend, or they can actually embed it in the cost of the product. Either way, the farmer gets to take advantage of that, that yield threshold level, provided that they follow the steps that we make in our recommendation. And again, if they do follow those recommendations, they will see that yield level, which is the baseline of the product warranty that we provide. And if they don't, they get a check. And I think that's a little bit unique in agriculture. And quite frankly, it's a little bit difficult given all the variability that you see in agriculture related to weather and environment, genetics, and farming practices. So in the end, what we're trying to do is provide a product warranty, and that product warranty will provide that yield threshold and show that the product worked if it exceeded that threshold, and of course it didn't work if it didn't. A little bit more detail about how the product can be priced. And again, this will vary a lot based on what the ag retail decides to promote and what we decide to build into the APP product. But let's use an example of $10. There's always a chance that any APP that includes a warranty might not rise above the yield threshold that we provide. And so what we want to do in working with ag retail is apply our analytics to determine how often that's likely to occur and to price the product accordingly. In this example on this slide about the cost structure, what we're assuming is that the product itself costs $10. The ag retailer might try to absorb as much as $8 of that, and in return charge the grower $2 for this additional extended warranty. In return, the products that are sold as part of their recommendation will perform above that level that we've set forth in the warranty language. And if not, the user or farmer gets a check. And that check, in this case, in this example, might be $30 an acre. And what we try to do, though, is work very closely with both the ag retailer, particularly their sales and marketing team, and then the growers that they sometimes give us access to, and design a product that meets the needs of either that geography or that crop. And all this together, what we hope to do is combine it into a product that helps farmers and growers manage some of the risk of their operation. I guess what we see a lot is growers and farmers, unfortunately, have to shoulder most of the risk, and there's not a lot of these new tools that are being brought to bear for them to help them manage that risk. So again, this is just an example of one price structure. Some of our customers might charge the grower the full $10 per acre for the product. Some of them might include this warranty as free of charge with the purchase of their product. It really depends on what that ag retailer wants to do. Our analytics are really directed to help design the best product for that ag retail space. We believe that this is really kind of a win-win for both the grower and the ag retailer. Certainly for the grower, we think it does increase the baseline that they can expect for their products on a year-over-year basis. We believe that it gives them some assurance that the products that they buy will perform to a certain level. And it does also allow, in a low-risk way, farmers to try new products that carry with it this type of a backing or an assurance. Hopefully, this will incent a lot of farmers or growers to maybe try some of these new tools, new technologies, and maybe adopt some things, or at least try some things that they might not have tried without the fact that those have been backed by some financial product that we provide. On the flip side, we believe that the ag retailer themselves benefit from offering this product. We believe that it's a differentiator in the market for those ag retailers, and we also believe that it shows or positions them as an innovator in the market. For them, the bottom line, however, is really that they get to sell some of these products and hopefully in doing so, see that the grower and farmer's yield increases. Because absent this, we might be into that downward spiral that I mentioned at the start. Growers wanting to cut their input costs might not spend the money that they need on some of these newer tools, and as a result, their yield might suffer. And so what we're trying to do is create an incentive for growers to adopt some of these new tools and technologies. Anyway, Hannah, that's kind of what I have from Growers Edge. Again, we're excited as our products are advanced in the market. Again, we work primarily through ag retail and ag input manufacturers. We can customize or modify our product in almost any number of ways. And depending on what that ag retailer wants to do, it can be private labeled under their brand, or it can be offered under our brand as well. What we really do hope to do is help the growers address the problems of risk management and risk mitigation, all along the same path of trying some of these great new tools and technologies that are out there, hopefully improving yields, improving profitability of the farmer, and hopefully positively impacting our whole food channel. So with that, Hannah, I'll turn it over to you and see if you have any questions.
Absolutely. Thank you so much, Dan, for this presentation. I want to let the attendees know that they can ask a question by using the Q&A box that's found in the bottom middle of your screen, or if you'd like to ask your question out loud, you can raise your hand and I will unmute you. But to kick it off, Dan, I'm really curious, what have been some of the challenges unique to developing your products?
Well, certainly with any type of new product, you always face a hurdle of acceptance. Farmers, I think, are really good at identifying things that make a difference for their bottom line. And when a product is shown to have a benefit to them, whether it's financial or ease of operation, farmers are very quick to adopt those new technologies. I think back to the mid 90s, late 90s, where products like the biotech revolution started. Farmers were very fast to adopt those technologies because they provided clear, tangible benefit to the grower. And so it's really incumbent on all of us in the ag innovation space to spend a little extra time explaining and making sure the customer understands what value can be brought to them and their operation if they adopt the product that's offered.
Great. Thank you for that perspective. And kind of along those lines, what are some of the ways that you've been measuring your success as a company?
Well, obviously for us, Hannah, the success of a company really boils down to revenue. And generally speaking, the number of acres that we're on. And again, we try to increase that every year. That's every company's goal. I think most importantly to us, however, is are we having a positive impact on the profitability of growers? So not only do we track how many growers we sign up and how many acres we are on, we also look at the end result and we're able to tell, did we actually offer a product that did move in a positive manner the yield or the output for that farmer? We make that data available back to our customers, which again, primarily are the ag retail folks. And hopefully over time, we'll be able to optimize the products that we're able to offer through this type of an approach and increase adoption, not just of an ag retail products, but even a specific company or a single product offering. In the end, we hope to have a situation not unlike a cell phone warranty or some of the other things that are very common out there, a protection that's built into the product and that customers can count on year after year to make sure they're at least exceeding what the guaranteed threshold might be.
Great, thank you for that. And jumping off of that, Meg Brigman has a question. Meg asks, you mentioned the difficulty with adoption. I'm curious what methods have you found most effective in demonstrating your value to potential customers?
Thanks for the question, Meg. I think because we are primarily a business-to-business or B2B company, our first difficulty, our first foot in the door has to go through our partners in ag retail. For them, what they are really looking to do is help their customers select and pick from all these great new technologies that they all believe in. I mean, there's a tremendous amount of data behind yield increases, even incremental ones year over year, based on all the excellent work done in R&D in agriculture. But getting our foot in the door at ag retail, when they're also being asked to look at all these other new technologies, whether it's digital or precision ag, drones, new seed or chemistry technologies, there's a lot of noise out there. But I think one of the things that's actually helped us is the fact that we don't make any of that stuff. We don't make a drone, we don't make a sensor, we don't make any of the seed or chemistry that we're looking to apply. What we're trying to do is apply our analytics to help the adoption of those easier. And so once we're in with an ag retail, then it becomes a little bit easier for us because we don't have our own sales organization. This is sold by the ag retailer through its channel. And quite frankly, because the reasons that we just went through a slide or two ago, most of those ag retailers are quick to adopt the product, simply because not only does it mean success for their customer and grower, but it also means that they're positioning their products for success as well.
Yeah, that's great. And we have another question from David Nothman. David asks, is your offering predominantly aligned with independent retail, or have you gotten a good response from integrated distribution like Nutrien, Elena, et cetera? If you have received good response from integrated distribution, what % of your business roughly is with independent retail versus integrated distribution?
So David, that's a good and very probing question. I think we really have probably 1/3 of our business, well, all of our business goes through integrated distribution. Now, a portion of our business is APP products, or our products that are sponsored by the manufacturers themselves, not just the retailer. But most of our relationships are with the integrated ag retail. We tend to go, or we have focused really on the Crop Life 100 list first. It's a good list for us to follow, and quite frankly, we're trying to gain access and increase revenue as quickly as possible. In the long term, any co-op, any retailer, any integrated retailer, or even manufacturer can certainly come up with a series of recommendations that's backed by a warranty that we provide. But today we've seen the best approach from those integrated retailers, primarily because they have a lot of different products that we can combine in an optimized recommendation, and that has the biggest impact for the grower.
Yeah, thank you. We have another question from Tom, who asks, as you consider your offering to growers, what area or product is most attractive, and where do you see the fastest adoption by growers? And do you expect to layer on additional products as more and more growers come onto your platform?
Yes. So to the answer to that question, the last question is absolutely. Once we do create that baseline or platform, we do hope that we can layer on a lot of other fintech type products for the grower. We talk a lot about fintech for farmers, and really that's what we're trying to build our business around. So while today we might build our products around yield and measure product performance based on the yield outcome, it isn't far off in the foreseeable future that we can tie yield to a commodity price and maybe talk about guaranteeing, instead of a yield outcome, a profitability outcome. That's just one more level of uncertainty that we haven't got to yet, and we'll be able to get to as we get more data. Regarding the first part of your question, where do we focus on, what crops and geographies? Today, we tend to focus on corn and soy in the Midwest. The reason we do that is because there's a lot of acres, and we're able to spread the likelihood of a product success or failure across the most, the broadest range of possible outcomes. However, there's a lot of data out there on a lot of crops in the U.S. We estimate that of the 330 million acres that are under the current federal crop insurance model, which we always require our customers to sign up for, that we are able to offer similar types of guaranteed or similar types of outcomes for any of those crops, whether it's corn and soy on one end of the spectrum down to strawberries, blueberries, or lettuce on the other. As long as there's a baseline of yield that we can look at and tie the product success or failure to, we think we can create a product for that geography. And then finally, longer term, we're blessed in the U.S. with a pretty robust federally backed crop insurance system. A lot of parts of the world are not. And so as we continue to refine our analytics, we believe that we're going to be able to take this similar type of platform and move it into parts of the world where they don't have a similar type of opportunity to manage their risk. And that might be a place like Brazil, or it might be Africa, or any part of the world where there's a crop that can be measured. So long story short, there's a lot of things on our product roadmap. We're excited to expand, but we really want to focus today on the market in the United States.
Great. And I know we're certainly excited to watch as your roadmap grows. We have another question from an attendee. They ask, how do you build in the risk of natural disasters like floods, hurricanes, droughts, tornadoes in the guaranteed harvest yields?
It's a great question, and I think it relies a lot on an understanding both with the existing insurance products that are out there and our product, which is much different. There are insurance products that you can buy to help manage against very discrete weather risks. Hail would be a great example. If you go out and buy a hail policy, it covers that possible downside better than ours could, quite frankly. And as a result, we exclude that type of coverage from our policy. However, there are some weather and environmental impacts that are much broader than a specific hail event. And so what we also look for when we build the pricing of our products is we look at county averages very closely. And if a county, for example, were to drop, we build that into the monitoring of our product so that it's a way to make sure that that is a systemic risk, not a specific weather risk like hail. So as a result, our product kind of the outcomes that we track very much move up and down based on how well that county average is doing. And the reason is pretty clear. If your product gets hailed on, that's not a product problem. That's just bad luck. And we hope that doesn't happen. And there's policies for that. But if there's a drought or a weather event that impacts more than just your field, we believe that the product that we promote should kind of move with that as well. A better product should still perform better, even if there was bad weather or low rainfall, et cetera. So long story short is we try to move a little bit with the county to minimize the impact of those macro weather events.
Great. That's really interesting. Attendees, feel free to raise your hand or add any additional questions that you have into the Q&A answer box. But Dan, I'm going to ask you one of the questions that we like to ask everyone who joins our program. What can the audience help you out with here, and what is the best way to get a hold of you?
Well, you certainly can get a hold of us either at our website, or my email is dan.cosgrove@growersedge.com. I think if there's anything that your listeners can help us with is just when you're out there buying your inputs, certainly go out and ask, how do you make sure that I see the benefit that you're promising me? Is this product backed at all? What happens if the product doesn't work as advertised? The more people that ask that question, especially at the retail level, we really do hope that we will start to generate the demand needed to for this product to be found all throughout ag retail. And again, what we're trying to do is apply very common fintech type principles and in a way that really supports farmer profitability. And once we're able to kind of crack that nut and get appropriate penetration, we hope to add on new products, even better, more exciting ones later on.
great, and that certainly is really exciting. Dan, I want to thank you for joining us today, since we don't have any more questions. And thank you, audience, for all of your active participation and questions. To let you all know, we host these calls every week at 3 p.m. Central. You can register for the AgriFood Conversations webinar series by going to agrifoodconversations.com. If you know someone that would like to watch this webinar, feel free to share it with them. A replay of this webinar will be emailed to you in the next 24 hours, or they can view it on agrifoodconversations.com. One other thing I'd like to note, this is actually my last time presenting on AgriFoods. I am actually taking an opportunity to be trained as an inventor and physician at Vanderbilt University's School of Medicine. So thank you all for the opportunity to be part of this great program.
Thank you, Hannah, and congratulations on that. That sounds like an exciting opportunity.
Yeah, thank you very much. And Dan, thanks for joining.
Thank you.